Market conditions getting hit pretty hard yesterday. The current majority bullish sitting at 8, and we on the 1 hour time frame we've gone all the way to majority bearish at 14 on the trend condition. Pretty significant selling across the board. What's even more remarkable is the number of stocks above the 50-day moving average has dropped to 18, basically 20. So we've got 80% of stocks in the S&P 500 that are now below their below their 50-day moving average. So really aggressive selling, and the internal breadth for that to be that percentage and the S&P to have dropped 3%, this could be a really significant area to be adjusting portfolios and be managing risk effectively right here. We also saw VIX have a really sharp spike yesterday. It's back down a little bit here, but again, that is a really volatile indicator, but that shot back to majority bullish 14 on the daily chart of VIX, and 60-minute chart actually had turned back to majority bullish a couple of days ago, and we talked about that weakness in the breadth and as well as VIX, and that the S&P hadn't quite moved. Well, it's starting to move here, so certainly to be areas to be aware of. Let's take a quick look here at some of the indices after the Fed's announcement yesterday. They did lower interest rates, but they're anticipating slowing that pace. So still hovering in this 4% range on bonds or on interest rates. We'll take a look at that here as well. NASDAQ, also lots of weakness there as well, really across the board, aggressive selling across the board. SPY, similar chart pattern obviously to SPX. The Dow Jones Industrial Average, DIA, majority bearish now on the daily, down to 9. And losing support areas. Lost the 236, lost the 382. Filling this gap, we may be back to a significant support area here for retest on this location. The Russell 2000 is certainly showing weakness here as well. Majority bearish at 10 and 14. Let's look at SHY. We saw bonds continue that overall sell-off. We talked about that, whether that trend was going to bounce to the upside, but as bonds are continuing to drop, we're seeing interest rates spike, and that is what the market is anticipating, and it's what the bond market has been anticipating now for quite some time. It just does not believe that the Fed has things under control, and this is just more proof of that as well. That leading into more economic scenarios with inflation, with high interest rates, that's going to affect real estate, and really it's going to affect everything here. Let's take a look at sectors and see how they held up. We've got technology, which held up decent. We've got consumer discretionary, which finally had a crack here in the trend. You've got on the 1 hour time frame 13. To the downside, you've got 12, majority bullish at 12 on consumer staples and technology. Those have been the two strongest. Everything else has already started to be weak right here. You've got majority bearish on industrials, which is similar to the Dow pattern. You've got majority bearish across the board on energy, which it had already started to show some weakness. Financials at majority bearish at 8, and you can see that 60-minute time frame. It's just a little bit earlier indication of that trend shifting. So as these are starting to shift here on that daily, that 60-minute time frame, that 1 hour time frame, starting to accelerate a little bit more quickly here. Real estate got a decent move here to the downside, pretty significant move. In fact, again, it's based on interest rates, and we're seeing that the real estate market, the bond market, everybody thinking that there's real trouble with interest rates and potentially could spill over into the economy, and the market is not liking that future, especially if the Fed is saying they're going to slow the interest rate cuts. We're seeing utilities also majority bearish to the downside. We're seeing basic materials, which had really started this downside aggressive move a month or so ago, and continuing that acceleration to the downside. Majority bearish on consumer staples and iShare, transportation, majority bearish. So you can see that these really aggressive moves down, they can actually turn those longer term trends, even though they're not really crossing over. You're getting a significant shift across the board, across all trend levels, and that is, again, it's an early indication that that trend at least is consolidating, compressing from that expanded state. Healthcare also showing weakness. Let's jump over and look at commodities and see how they did yesterday. Those oil kind of flat yesterday with a little bit of slight upside. It's basically sitting at trend neutral right here, 7 and 7, and attempting a rally, pulling back right here. Keep an eye on USO. Gold also selling off right here you've now got majority bearish at 8. And silver is going to be similar there as well. A couple stock ideas to consider. With market conditions how they are, I probably wouldn't be taking any trades at these levels, but a couple of stocks that are continue to move higher even in these levels. You've got JBL, which is a nice looking pattern breakout to the upside. And you've also got JOBY, which is in that air taxi space, still holding up, nice confirmation bar, except for it rallied and it retraced with those market conditions. So there may be a chance where if markets hold up, it could find some support. But remember, when markets are rolling over and turning to the downside, everything gets thrown out, good, bad, the ugly. It doesn't matter the quality of the stocks are going to drop. And so it just creates additional risk, and need to be prepared for that. That'll do it for today's update. Everyone have a fantastic day today.